All right, guys, it's Saturday. We're gonna jump into the weekly watch list video, but I figured give you a quick tour of the trading office where the magic happens. So my fiance and I, we moved in here, I think like 4 or 5 years ago, and we do plan on building a house maybe this coming year. But for now, guys, this is the office. Pretty simple, pretty clean. Got the couch over here. You're gonna notice a basketball theme. So we got the Kobe Bryant jersey. Believe it or not, I did have a short stint with the Celtics. I got a Kobe magazine, got some family stuff. Picture of the cocoa beans. Got the little couch, and so here's a story with the Christmas tree. Like I mentioned, we moved in here a couple of years ago. We bought 2 Christmas trees without realizing we got nowhere to put them. So the big one that goes out in the living room over there, that's in one of the closets, and yeah, the other one's in my office. Right, got the chair with the Kobe jersey, and got the desk right here. A little bit of artwork. Again, you're gonna notice a theme here. We got the Michael Jordan Wheaties box. We got the Kobe Bryant book. Got my boy Remington right there. Remington was in my my parents' house. Then we got the setup here, guys. Got the standing desk, got a smaller monitor, got a bigger monitor, and the goal is, you know, when we move out of here and I build the man cave, we're gonna get the quadruple decker. Really balled out the setup. But this is it, guys. Got a piece of the Chicago Bulls court here. 95 to 98, so MJ balled on that. And that is about it, guys. So this is where I make the videos. This is where I'm trading at when I'm on the mic over in the options room, the mastery. Pretty clean, pretty straightforward, but yeah, that's it. So figured I'd show you guys.
All right, guys, we're going to jump into the weekly watch list video for the week of August 1st. So yeah, look at that. Another month has come and gone. So hopefully, guys, it was a good month of trading for you. Hopefully you got better at your craft. But we'll jump in, guys. So obviously, big week for the market last week. We had Microsoft, Google, Apple, Amazon earnings. We heard from JP and the boys, the Fed. We got the GDP report on Thursday, and all said and done, we squeezed the crap out of the shorts. So, guys, I'll be the first one to raise my hand and say, hey, I'm wrong. And I'll show you exactly where I'm wrong. But for now, I'm pretty much under the thought process that for now, the bear market might be done and over with. Doesn't mean we go back to all-time highs. It just potentially means a path of least resistance moving forward is to the upside. And, you know, it's just based on the price action in the charts in front of me. It's not based on anything the Fed said. It's not based on any changes in the economic picture. Just good old-fashioned price action in structure. So we'll dive in, guys. I'll take a look at a few different things that I think will be important for the week ahead, and we'll start building our watch list. Let's get going. All right, guys. So before we jump into the watch list here, all the good stuff, I'll give you a quick look at the trades that we did in my mastery and the options room over at Simpler for the month of July. And you know, admittedly, the last 2 to 3 plus months have definitely been a little bit hectic on my end. You know, building out the indicator, testing it, tweaking it, torquing it, doing the webinar, doing the class. You know, I know this. I think we all know this. It's always good to get a reminder. Trading is a game that requires all of your time and attention. And if you're going to trade at your best, if you're going to get better every week, and if you're going to trade up to your potential, it's a game that requires, it requires everything that you got. So the good news for me, and the good news for those of you that trade with me over at Simpler moving forward, the indicator's done, the class is done, which means I get to get back to, basically focusing on nothing but trading, which is a beautiful thing. Definitely a worthwhile few months. You know, I know a lot of you guys got the indicator. I think it's a game changer, but nonetheless, we are getting back to laser focus on nothing but trading. So, for those of you guys in my mastery, and for those of you in the options room, here's the thing, guys. Moving forward, as far as my trade alerts go, it's going to be up to you to choose your position size. You know, one thing I never wanted to do was become a portfolio manager, become a wealth manager. My dad does that for a living. It's a different game, right? When you're basically telling people, hey, here's how much to risk per trade. I never wanted that. What I wanted was an opportunity to trade with folks, help them improve, and just make some money together. So With that being said, guys, moving forward, for any trade alert I post, it's just going to be the same fixed risk per trade. That's going to be a personal decision. For me, we got the indicator built. I think it's a game changer. The rest of the year, I'm looking to be a little bit more aggressive. I'm going to risk 5% of my account per trade. So if you guys want this spreadsheet, and probably what I'll do is every month at the end of the month, we'll kind of do a recap video and recap all the trades. But for the mastery trades we did this month, and like I mentioned, sometimes I tell you guys to risk 2%, 3%. Just moving forward, pick your set risk and do the same risk for every single trade, unless noted otherwise. So for me moving forward, the risk is going to be about 5% of my account per trade. So with the mastery trades this month here, why does that say May? You little bastard. July. So for the mastery trades, we had trades in Pepsi, Coin, Zoom, Cisco, and XLE. So guys, if you were to risk 5% of your account on each of these trades, 1 loser in Pepsi, 4 winners in Coinbase, Zoom, Cisco, XLE, it'd be about a 9% return on your overall account. If we're doing the math here based on a $50,000 account, it'd be about $4,500 of profit. For the couple of trades that we had in the options room, QQQ and Oxy, about $2,500 of profit. So again, if you're risking 5% per trade, doing the math on a $50,000 account, about a 5% return, and then collectively here, $7,000, about a 14% return. So like I mentioned, typically it's simpler. We tell you, hey, risk 2.5%, risk 3, 4, 5%. Just pick your fixed risk. Do that for every trade. So that was our month over there, guys. I'll update you in about 4 or 5 weeks here, tell you how August goes. But with all that being said, we'll dive in here and start building out that watch list. All right, guys. So like I mentioned, and I'll be the first one to say, hey, I'm wrong. And I'll be... Trading is not about being right or wrong. It's just about being on the right side of the market. So the moral of the story is don't marry your ideas. Focus on the chart in front of you, but for now, the chart in front of me is showing signs that the bear market, at least in the short term, might be done and over with. So, I'm of the opinion that that's the bottom. And it's not that I think we're going to go back to all-time highs. I just think that potentially the path of least resistance for the market could be to the upside, maybe up until the next Fed meeting in September. And again, it's not based on the news. It's not based on the Fed. It's 100,000% not based on CNBC. It's all based on good old-fashioned price action. And of course, guys, the news right now is negative. The news couldn't be any worse. The sentiment couldn't be any worse. The narrative couldn't be any worse. Economy's falling apart. We're in a recession, depending on who you ask. The market's always thinking forward. The market's going to improve before the economics improves, before the sentiment improves. So remember, if we jump in the time machine here and take it back to March, April of 2020, a couple of you might remember, there's a lot going on in the world back here. COVID hit. Los Angeles shuts down. New York shuts down. The United States, the world shuts down. People working from home, people out of work, all kinds of craziness, right? When the news was at its worst, when the narrative was at its worst, the market told you a different story. It improved the structure, and it started to show you trending properties. That's a little bit of what we're seeing right now. So it's not based on, hey, the economy is improving, or hey, the world is no longer bearish. It's the opposite. The world seems a little bit too bearish right now. And I'm hearing more and more that people are wiping out their retirement accounts. They're taking their losses. They're calling it quits. Just kind of feels like capitulation, if you ask me. So I'll change this whole opinion that the path of least resistance is to the upside moving forward, if and when the S&Ps, the Qs in the market, dump back under that daily 21 EMA. To me, guys, that's a line in the sand. But as far as the improvements here, and keep in mind, it's not exclusive to the S&Ps, it's not exclusive to the QQQ. We're seeing this progress everywhere. Energy, healthcare, industrials, utilities, consumer staples, semiconductors, big tech. The market itself. So as far as the structure, that's really improved across the board. We're back above that daily 21 EMA. We've canceled out, for the S&Ps, the Qs, for pretty much everything. We've canceled out all the big 3 sell signals. So I don't have any signal right now with the big three on any time frame telling me path of least resistance is to the downside. So we go from bearish to neutral. Then the party really starts and we go from neutral to bullish. The S&Ps have generally gone from bearish to neutral to bullish. 1 hour, 30 minute, 15 minute, 5 minute big three buy signal. And again, same thing here in the QQQ. We improve the structure. We cancel out all the sell signals, including the daily sell signal. We go bearish to neutral, neutral to bullish. 1 hour, 30 minute, 15 minute, 5 minute buy signals. So for me, guys, regardless of anything going on in the world, I can't really think that the bottom is in. I can't be thinking, okay, path of least resistance is to the upside if we're under the daily 21 EMA and we got big three sell signals. I can't be thinking the bottom is in. When we improve the structure, when we cancel out every single sell signal, and then we start to get a big wave of the buy signals, I don't care what the news is telling me, the price action is telling me, things might be looking up here. So, really good improvements over the last couple of weeks here for the bulls. And then, moving forward here, guys, the big question is really just, does the market start to show us trending properties? In plain English, do we start to act like a market that wants to trend higher? A market that wants to trend higher is going to do a really good job of holding support and structure on the pullbacks. The pullbacks to the hourly 21, but mainly the pullbacks here to the daily 21 EMA. So I think an interesting stat, earlier last week, the S&Ps, the Qs, the market, we got that flush to the daily 21 EMA. Holds up like a total champ, and we turned the corner and rallied all the way into the weekend. For what it's worth, guys, and again, these are the signs of progress we're seeing. This was the first time since August of last year, like the first time in 12 months. Think about this, right? First time in like 12 months where the S&Ps, the Qs, etc. dipped to the daily 21 EMA and actually held support and actually turned the corner. Up until last week, for the last 12 to 13 months, every time we get back above that daily 21 EMA and then dip back to it, the bulls fail to hold structure. Back above that 21, fail. Back above 21, fail. Back above that 21 EMA, we fail. This is like me back in public school. Big push above the 21, first back test, fails. We're above, we fail. We're back above, we fail. Y'all get the point, right? We're not trying to read too much into 2 weeks of price action. But in a bearish market, in a downtrend, these are the things to pay attention to. We start improving structure. We get rid of all the nasty big three sell signals. Then we get some green beans. Right? Green bean being the buy signal. So now the S&Ps, guys, have improved their structure. They're actually holding on the back test of the moving average. And I've got 1, 2, 3, 4 different time frames telling me that the path of least resistance, based on my criteria, right? The trend structure momentum criteria is to the upside. All big improvements, and then a huge component here, and something to really pay attention to over the next couple of weeks, is going to be the weekly chart. Really big stuff here. The S&Ps last week got the first weekly close above the weekly 21 EMA since March. QQQ gets the first weekly close above the weekly 21 since March. Tesla closes above the weekly 21 EMA for 2 weeks in a row. Amazon, huge pop on Friday, right, up almost 10.5%. We're back above the weekly 21. And then Apple, one of the stronger names in the market, 2 weeks in a row back above the weekly 21 EMA. So now from the ground up, right, from a 5-minute chart all the way up to the weekly chart, we're improving structure. We're starting to see trending properties, right? The pullbacks actually hold. And now we're working on improving the weekly structure. So all good progress, guys, as far as the equities market. And like I mentioned, semiconductors, same signs of progress. Back above that daily 21. So far the dips have held. Not a single sell signal. 30-minute, 15-minute, 5-minute buy signal. And if you check out the weekly chart here, the semis got their first close above the weekly 21 since January. Right? Since the downtrend started, we haven't gotten a close back above that weekly 21. So if you look at energy Energy's improved. Cut a nice pop there last week. Utilities, XLU, has greatly improved. XLP, consumer staples, even the transports, even the real estate sector, natural gas, even crude oil is trying to make some improvements here. So it's a market-wide thing. It'd be a little bit more difficult for me to think, okay, we might be getting back to some bullish trend here if the semis and healthcare and the financials and energy and the industrials look like shit and big technology was looking pretty good. A little bit tougher to have conviction in. The fact that we're seeing all these improvements in structure from a 5-minute chart up to a weekly chart in most cases across the board has me thinking a little bit differently. Then if we check a few of the other pieces of our puzzle, guys, we've talked about the dollar over the last couple of weeks here. I think potentially for the bulls, this is what could seal the deal. Bullish dollar typically makes it tough for the equities market, right? The S&Ps, the Qs, the stocks, to actually get any kind of sustainable trend to the upside going. In other words, if we're going to look for the S&Ps, the Qs to rally throughout August, rally throughout September, we got to see the Dixie trading lower. Up until Thursday, Friday of last week, one of the prettier looking trends and charts in the market. If you check out the weekly chart though here, guys, we're a little bit extended. So based on the rule of thumb, that +2 ATR is that moment in time where there's a growing probability of a pullback to the 21 EMA. The Dixie could be setting up here for a pullback towards 103. Now here's what it's going to take. Right? Bullish momentum, right? Bullish big three, the buy signals, they can take you from the 21 EMA all the way up here towards that promised land. What's going to cause the pullback is first the exhaustion of the bullish momentum. So for me with the big three here, that means the buy signals, the green signals, start to go from bullish to neutral, right? Green to yellow. Basically the bulls are running out of gas. That transition from bullish to neutral, that can give you the dip. If we're going to pull back any further, now we got to transition from neutral to bearish. So if you guys look at the big three tab over here, 5-minute chart's gone bearish, 15 minutes gone bearish, 30 minutes gone bearish. No more bullish big three on the 1 hour, 2 hour, 4 hour. All the bulls have left is that daily buy signal. So I do think Dixie could head lower here. And yeah, like I said, guys, that potentially is the piece of the puzzle that in the short term could seal the deal for the bulls. If we check out HYG, the junk bonds, right, that looks proper. For the market to get a sustainable rally, ideally, HYG shows signs of strength. So the Dixie checks out, HYG checks out. However, guys, as good as things look here, as much progress as the bulls have made, I don't think we want to head into Monday's session, blindly looking to get long. If we jump back to the S&Ps here, we got to respect the golden rule. The golden rule is, anytime we're up here towards 2 ATR on the daily chart, doesn't mean we have to pull back. Right? There's no guarantees or promises in trading. There's just probabilities. So remember that golden rule. Anytime we're up here at +2 ATR on the daily chart, there's a growing probability, guys, we're going to eventually get some sort of flush. Doesn't mean we pull back all the way to the daily 21 EMA. But if you look at like an hourly chart here, we're a good 1.5% above the hourly 21. So in other words, I think for now the bear market is done and over with. I think the bulls got control. I'm going to need a dip here to put some cash to work. So that's my advice for the following week, guys. Or this coming week, rather. Look to buy the dip. As long as that dip holds structure, could be a dip all the way to the daily 21. Could just simply be a dip to the hourly 21. As long as that dip shows those trending properties, meaning we don't rally, pull back, and just blow through all support. We don't want to see that anymore. What we're looking for is we get the push, we pull back, we hold, then we're looking to get long. So that's my advice. Be a little bit cautious here Monday morning, Tuesday morning. Wait for the flush out. Then we're looking to put some cash to work. So in terms of where do I want to get long, I think the easiest trade on a pretty good dip would kind of just be getting long the QQQ or the SMH. That covers all your bases. And like we talked about, Energy looks good. You could buy energy on a dip. Healthcare looks really solid. You could buy healthcare on the dip. You could buy the industrials on the dip. You could buy consumer staples. You could buy the utilities. The easy trade, when the whole market looks buyable on a dip, would just be getting along the S&Ps, right? The S&Ps or the QQQ kind of covers all your bases. Because in other words, if the S&Ps just roll over and crap the bed from here, the utilities, energy, industrials, etc., they're probably going to roll over as well. So you can trade the mothership and kind of simplify the process. But as far as a few spots that look interesting, guys, I'm going to give you Bitcoin and Tesla. Again, the easy trade would be the S&Ps, so that's probably, I think, top priority. But as far as Bitcoin and Tesla, we did for those of you that took the Big 3 indicator class, we did that bonus session last week talking about reversals. Basically, guys, here's my reversals checklist. Find something trading down near 2 to 3 ATR under the weekly 21 EMA. Right? So oversold on a weekly chart. That's step 1. Step 2, improve the daily structure. Get back above that daily 21. Step 3, cancel out every single Big 3 sell signal. Step 4, we go from neutral to bullish. That can trigger that reversal, right? In a downtrend, coming from an oversold spot, then improving your daily structure, canceling out your sell signal, right? Basically getting exhaustion of all that bearish trend and structure, and then going from neutral to bullish, that can get you back up towards the weekly 21. So we're seeing this dynamic across the board. The semiconductors, the QQQ, the SMH, even a name like a Caterpillar. Hey, check out Caterpillar here. It fits that reversals checklist perfectly. Oversold on the weekly chart. Now, mind you guys, oversold, that's not enough to justify looking for a reversal. No, that's how you catch the falling knife. Oversold on the weekly chart, step 1. Step 2, get back above that daily 21 EMA, improve the structure. Step 3, cancel out every single Big 3 sell signal from a daily chart all the way down to a 5-minute. So we're going from bearish to neutral, then we're going from neutral to bullish. You can see Caterpillar's got a 30-minute, 15-minute, 5-minute buy signal. 1 week, you're down here, oversold, and a couple weeks later, you're up here at the weekly 21. So as far as that reversals dynamic, if you guys check out Bitcoin here, you can look at the Bitcoin futures, or you can look at the Bitcoin ETF, BITO. But here's the scoop, guys. Bitcoin, and mind you, I'm not a crypto guy, so nothing really to do with Bitcoin, the product, so to say. It's just, again, price action. Bitcoin is one of the few spots in the market that hasn't made that full, rally back to the weekly 21 EMA. So this kind of fits the reversals checklist. Oversold on the weekly chart. Step 1. Step 2, improve daily structure. Back above the daily 21 EMA. So we got step 2. Step 3, cancel out our sell signals. So if you look at the Big 3 tabs over here, none of them are red. So we don't have any more sell signals, right? Nothing telling us the path of least resistance is to the downside. And now we got some buy signals, 2 hour and the 1 hour. If we check out the 1 hour here, damn good looking squeeze. So you've improved trend, you've improved structure, you've improved momentum, and the thought process here, guys, is that weekly 21 EMA, it's a giant magnet. Just that basic concept of reversion to the mean. At some point, price always comes back home to the 21 EMA. That can't happen, though, regardless of how oversold you are, until you fix up the Big 3. Your trend, your structure, your momentum. So Bitcoin's done a pretty good job of improving here, and if we jump over to the Bitcoin ETF, BITO, same scoop. Right, oversold on the weekly chart. Again, oversold's not enough, because based on that rule of thumb that -2 is oversold, it's oversold back here at 20 bucks. Basically gets cut in half again. So step 1, oversold. Step 2, improve the daily structure, back above that daily 21. Step 3, get rid of all of our sell signals, so go bearish to neutral. we're pretty neutral here. Then step 4, let's get some buy signals. For now, you got the 30-minute buy signal with the squeeze here on the Bitcoin ETF. So it's not again, right, no promises in trading, no guarantees, just probabilities. Now that we've improved the structure, kind of gone through that reversals checklist, not a guarantee or a promise, but a better probability now of a move back up towards that weekly 21 EMA. Doesn't mean Bitcoin gets there. It just means Bitcoin has the invitation. So as far as good risk reward here, guys, when all this comes together, it makes for a good risk versus reward trade. What I'm going to look to do next week, ideally on a little bit of a dip, but what I'm looking for next week here on the Bitcoin ETF is buy some calls that expire in September, put my exit on a close under that daily 21 EMA, and my profit target's going to be a push all the way up towards that weekly 21. So of course, just because we have the reversals checklist lining up here, doesn't mean the market, doesn't mean the trade's going to work. But what you have to like is a risk reward. Basically, here's your risk. You get long at that 21 EMA. You cut this loose on the close back under the mean. The reward is a push all the way up towards 19 bucks. Right? A reversion to the weekly 21 EMA. So there's your risk profile. Here is your reward profile. That's what we're looking for, guys. And that's kind of the difficulty right now of wanting to jump in here blindly on Monday morning and get long the S&Ps. For now, I think we continue to trend higher, but this has kind of made the high probability move. My preference up here is, okay, I'm going to wait for a dip, then I'm going to get long again. So I do expect the S&Ps to accuse most of the market, potentially over the next couple of days here, to give us a pretty good flush. For now, I think it's a buyable dip. But what I got to like about Bitcoin is, all the criteria is coming together for that big reversal, but we're not crazy extended. So on a little dip here, guys, I will look to buy some calls for September expiration on the BITO. And then as far as the Bitcoin stocks, before we jump into Tesla, Moderna looks really good. Improve the structure, cancel out the sell signals, go neutral to bullish. It actually starts to behave a bit more like trend. Right? This is what we're looking for out of the market. We expect the pullbacks, we expect the flushes. As we go from point A to point B, that's what you're looking for. Behaves a bit like a bullish trend. So Mara looks pretty good. I would like to buy a dip here on Riot. Keep in mind, though, we got earnings coming up here. Good old earnings, but Riot looks really good. Improve the structure. Cancel out our big 3 sell signals. Good looking dip. And then you got Coinbase as well, which Coinbase has got a little bit of work to do here, guys. Also got earnings coming up. It's trying to improve the structure. As you can see, there's no sell signals. It's neutral. So it's making progress, but I'm not going to jump in without our buy signal. We had a nice trade a couple of weeks ago in Coin. I'm looking for the same exact trade. Get long at the 21, take profits at +2, but can't be looking for that trade without my green beans. You need that big 3 buy signal. So I do like Bitcoin here, guys. Probably going to look to buy a little bit of BIT. I want a dip here. But then one name I would really like to buy in a dip here would be Tesla. So keep in mind, Tesla's, like a lot of the market, a little bit overbought here. Doesn't mean it has to pull back. It just means you're going to get a better risk reward on your entry if and when it does. But Tesla looks like a beast here, guys. Daily squeeze firing long. 2 weeks in a row above the weekly 21. My thought process is on any dip, as long as we can hold above 800, meaning as long as we don't fall back under the weekly 21 EMA, I think we got a shot here, guys, at a push towards $1,000 bucks. And again, we focus on price action and structure and signals. But for what it's worth, a few folks in the options room had mentioned last week that Tesla potentially is going to vote on another stock split this week. So the theme with Tesla has been, it'll rally to $1,000 bucks, then they do a stock split. Then it gets back to $1,000 bucks, and they just keep on doing that same pattern. At $1,000 bucks per share, they split the bad boy. So don't read too much into that. Maybe a little bit of a catalyst, a little bit of a cherry on top. But putting that aside, the structure looks pretty good here. So the difficulty again, guys, is just we're a little bit cooked here. I don't like chasing, getting long up here, because then you're taking it on the chin, you're taking the L on the very pullback I think you want to buy into. So waiting on a pullback here in Tesla. However, the trade I would look for here, guys, pull up the Analyze tab. What I would like to try to get would be the 950, 1000, 1050 call butterfly for August 19th. Right, August monthly expiration, call butterfly at $1,000. Now, at the moment, that butterfly is going for like $4.50 to $5 per contract. I'm waiting for a dip here. I'd like to try to get it for about $2.50. If we can get that butterfly for $2.50, guys, let me see, $2.50. Yeah, let me see. So I'll probably do about 20 contracts if I can get it for a $2.50 debit. Again, position size for your account, right? But this is the kind of trade where if I can get that dip, I can get my desired entry. I can put up about $5,000 of risk. Never looking to lose the full $5,000, but I can allocate $5,000 of risk. If we can get a push here, even the second week of August, right? The week of August 12th. If I can lock in that butterfly for $2.50, I can risk my $5,000. A push towards. Let me make sure I don't have anything else open here. Nope. No, if I can get that for $2.50, guys, a push towards $1,000, you're looking at about a $20,000 profit. So even if you only do one contract, right? So you've got a smaller account, you risk $250. You buy that call butterfly on a dip. Couple of weeks into August, we're pushing towards $1,000. Your $250 risk results in about a $1,000 profit. Now, obviously, with the butterflies here, the real magic would be that you actually hold that butterfly all the way up until expiration. And if we can actually hover around $1,000 the day of expiration, now your $250 risk is a $2,600 profit. On my position size at 20 contracts, if you catch the pin, it'd be about a $53,000 profit. Sounds awesome, right? And hell yeah. We'll take a little bit of that, but even as just a directional trade, buying it on the dip and looking for a push upwards of $1,000, there's some really big potential here, guys. So whether it's Tesla, whether it's Amazon, whether it's Nvidia, whether it be the energy sector, whether it be natural gas, just our market as a whole right now, a little bit overbought in the short term. I do think between now and September, the path of least resistance is to the upside. And like I mentioned, guys, I got to change that opinion if and when the S&Ps and the Qs are back under that daily 21 EMA. But until proven wrong, looking to aggressively start buying the dip here. Ideally, we get a dip early next week. Then we can put some cash to work. So, 2 ideas for you. Long BITO with a stop under the daily 21 EMA with a target of the weekly 21. And then for Tesla here, Tesla's a freaking nut job, guys. So, one that we'll have to take day by day. But if I can get a little bit of a flush next week, I would like to buy that butterfly, 950, 1000, 1050. So, $50 wide, August 19th. I'd like to buy it for about $250. If I can get it for $250, that's one of my trade ideas here for a little bit of BTFD and buying that dip. But that's all I got for now, guys. Frankly, I'm not running too many scans this weekend. I lied. I'm always running the scans, but as far as, the game plan for Monday morning, we got to be a little bit patient. Even if Tesla, the S&Ps, the Qs, even if we rally until the end of time from here, which is probably unlikely, but even if we just rally all the way until September from here, you got to play the ebbs and flows, right? You got to pick your spots wisely. Typically, the locking and loading up on calls up here at +2, not the wisest spot to get aggressive. So be patient this week, guys. Be disciplined. For those of you in the mastery, we'll do a couple of live trading sessions this week. For those of you in the options room, I'll be on the mic Monday morning for the open. And we'll see what the bulls got here, guys. But for now, what the bulls have got is 2 weeks of some pretty good progress. It could all fall apart quickly. So like I mentioned earlier, never marry your idea. But we're improving structure. We're holding the dips. Things like the dollar is starting to play ball here. And then pretty much for me, guys, most importantly, no more big 3 sell signals. And a lot more big 3 buy signals. So if you haven't already, I'll put the link in the description of the video. You can check out the big 3 indicator. But otherwise, guys, that's all I got for you this weekend. Hope you found the video helpful. For those of you in the mastery, we'll be live tomorrow morning. Sunday special at 9 a.m. Central. We'll run the scans. We'll kind of build our watch list and start pricing out a few trades here for the week ahead. For the rest of you, if you haven't already, go on ahead and subscribe, and I'll talk to you guys in the next video. Have a good weekend.